Hey guys, Sam back with you Monday morning, January 8th. Again, had a member interested in an update on Stellar Lumen. So I've got XLM to Bitcoin here on Binance on the left and on Bittrex on the right. Now, one thing that I thought I might make a point of mentioning and noting here. If we go over to CoinGecko, take a look at Stellar. You can see, so of course, first thing is 76 on the scale here, so very high. This is a very strong project, 11 billion in market cap. This is major crypto. So if we look at this now, here's the thing. We can see that since it's been trading on Binance now, the majority of the volume here, 33% of it, is trading on Binance as opposed to just 21, call it 22% on Bittrex, then down to 18 on Polo. So it's spread amongst those three predominantly. But now we have the majority of it on Binance, which Binance, of course, becoming more and more popular. A lot of people trading there, myself included. So what do we do? So the first thought would be, okay, well, let's just go pull it up on Binance. Well, let's go take a look here. So the first problem we have is that it hasn't been listed on Binance for very long. So this big candle here, when it first hit Binance, that's on December 8th. Well, if we go over here and we look at Bittrex, well, we go way back. We go back to, I think, 2016. So you have much more history here. So, it becomes a question of, where are you going to focus your attention, and are you just going to ignore all of the prior chart data if you're trading on Binance and just take your low from here? Well, December 8th, as we look over here for December 8th, that would be right here. So as we have it here with more data, that December 8th is a wave 2 low. If over here on Binance, we'd be starting here. This would be just the beginning of maybe it's a wave 1. My point being, you can't discount all the prior history just because it's now on your favorite exchange. You've got to factor that in. So for any technical analysis here, noting that this low here matches with this wave 2 low, we kind of have to factor that in. So I'm going to do the analysis here on Bittrex because I've got that additional data. Now, you could say, well, does it matter anymore? Because here's the classic pump and dump for crypto that we see all the time. You can't ignore it, right? So we have to factor that in. Now, whether or not this is a 1, 2, and then we're going up into the 3, remains to be seen. I think you can work technically here from this is the absolute low from this long move before we get the first push higher. But that certainly plays as a 1, 2, right? So here would be the low on Binance. So I would encourage you, if you're looking to trade this coin and you're going to swing trade it off of it, so I've got a 4-hour here, I would keep both charts up. Maybe you're doing your trading off of Binance, but you're doing your analysis off of Bittrex. Just a suggestion. So here, if we look here, so we get a 1, 2, 3, 4, 5 up into a 1. So I'm wicking off the 1. Here's our 2. Scream up for the big 3. Okay, that's all well and good. So let's just be, very methodical about how we'd approach that. So we'd take our fib tool. We're going to pull from our 2 low as we would for any Elliott wave count. And what do we see here? So the first thing we see is, if you can see it, if I take this off, you can see that a little bit better. So we come literally to the 50 to the tick. All right, so that's no surprise. If you watch my videos and if you studied some of my material, you're anticipating that, right? So that's the classic algo entry there. So they're buyers at the 50. And we get a reaction here. Now, so this is where it's the integration and the combination is what I'm teaching you between just a straight algo pull, pivot to pivot, and then adding in some Elliott wave nuance here to help us identify low risk, high reward potential entries relative to an Elliott wave count. As I will often tell you, the Elliott wave is secondary to the algo pulls. It's how we try and weave in and around so that because we can't, typically we can't trade with the same kind of risk parameters that an algorithm will, that may be funded by God knows, how deep the pockets are. So we use Elliott wave to try and weave in and around the algo pulls for lower risk, more precision entries. So I just want to preface what I'm about to show you here. That this is you certainly could have been a buyer here at the 50 if you just don't want to focus on the Elliott wave. Well, you could certainly do just fine here. Being buyer at the 50 here, you've already had pretty decent little pop here. But I suggest to you that there's a more precise way to approach this by adding the Elliott wave to it. So if we look at a wave count, we've just clearly this is our third wave. Now, question: is this our fourth? Could be. I mean, look at the two wave, right? So one of the things that Elliott proposed and observed through his analysis is that there's very frequently, there's a tendency, he would use that word, a tendency for there to be an alternation between the complexity of a two wave and a four wave. So if one is simple, the next is likely to be complex, and vice versa. So that could be the four. I mean, these are not absolutes. These are tendencies. So since we have a very simple, but you can see here what happens. So we come down hard, and then we get that classic B, and then we get the shallow C. Again, as I've said previously, it's less common in the two, but there it is. So could this could very well just be the A wave. So if I open this up, let's go to the 1 hour, take a closer look at it. So here's the tick 50, front run by a tick, just perfect technical trading. Let's get that dialed in. Okay, so the assumption I propose to you now is that what we're doing here is putting in an A wave. That may be the B. Now this would be shallow, so you could potentially have the classic triangle pattern that we see in crypto all the time. So we're getting the shallow C wave. Now that would be very shallow relative to what we're seeing here, to the size of the third wave. This short of this, the length of the C wave relative to the A, that's very, very shallow. That would surprise me. I would like it a little bit better here. There's a little bit better symmetry there. But yet again, I mean, many a time we've been left, left out of a trade if you're waiting for the perfect entry here for at least a double bottom on the A. We see this a lot. It's just it's just a strong bull market. Impatient buyers, they're not willing to wait or let the C develop, so the buying comes in here to essentially front running the C wave. So, we've certainly got a valid pull here. Here's the 50. Here's the negative 23.6. That could be it. I like it better with more complexity in the correction. It's just not enough there for me to just be buying here. So if we look here, I get an A, B, C into my B wave here. There's maybe you could make a case that you've got some sort of a 1, 2, putting in a 3. I'd rather see that to finish to show me I've got better odds here. Right? It's always about probabilities. So yeah, you could be a buyer here, and you might make a gazillion dollars. But you're into the gambling side of it as opposed to waiting for higher probability trades. Now, listen, people have done incredibly well in crypto, just rolling the dice and buying any sort of pullback. But I mean that eventually, you're likely to get burned doing that. I mean, leave it at that, right? So it's the trader's choice. How much risk tolerance you have. Are you willing to just roll? Hey, we got a correction. It's down to the 50. Let's just buy it. That has worked. So here's what I see. I see this shaping up. So there's the classic triangle, but I sure would like to see one more push down to give me 5 waves in my C wave. So if I take that up a degree so it makes a little more sense. Let's go to, boy, my machine is slow today. Okay, well, we'll see if that plays. I'll leave that alone. So that you get the idea. Ideally, we'd have a C wave come down there. If I can get this. Okay, there we go. So 1, 2, 3, 4. Now, if this just takes off, you're left out of the trade. You don't get it. I would like to at least see it come down, and if we're not going to get a new low on the 3, at least give me a double bottom. Or what ideally you'd like to see it down here. That's ideally what you'd like to see. So you get something more like that. So you get more of that descending triangle pattern. I love it here. I'm a little bit suspect of it there because that's just years of doing this. Jumping the gun and not waiting for the trade to finish the correction, can be dangerous. A good way to, just step into something you're going to get stopped out of promptly. So you wait and see, and let's just say, for the sake of the discussion here. Let's say that we break above it. Well, okay, so you didn't get the low here. Okay, well that's I'm not going to cry about it. But what I'm going to look for is the next pullback. So all that does is give me more confidence that okay, well I had a shallow C wave. I didn't get the complete subdivision that I was looking for. So if that turns out to be it, and this we get the truncated C wave here, and this ends up being my 4. Okay, I didn't get the pivot low. All right, well, so do we get a 5-wave sequence up here? Okay, great. Give me a 3-wave correction. I'll take the 2. I'm fine with that. You're not going to get every pivot, every swing, every turn. You're not going to get them all. Deal with it. Accept it. It's just not. There's too many things happening at once. So if you miss it and this takes off, we wait for the 2. Simple as that. If that is the 4 and that's my 3, well, I got lots of upside there. I'm not worried about not making enough money in that trade. I'm not worried about the risk reward not being good enough. I mean, look at here's the first target. That's just the algo target. We start putting the fib projections for a wave 5 target. We're going to at least be up here at the negative 618. So plenty of blue sky up there, plenty of opportunity to have a home run trade right there. If this is going to play as a 1, 2, 3, if this is our 4, right? Again, it remains to be seen. So don't sweat it. This is the problem. People bring up a chart and they see this, and they don't put it in perspective. So when you have zoomed out like this, or zoomed in, I should say, zoomed in, it looks like, oh man, I got to get this. If I'm going to go up and we're going to challenge that high, I better get it here so I can make enough money to offset the risk. Because if I'm going to buy it here, well, stop's got to be somewhere on the other side of the 50. That's why you got to pull out and have a look at it and say, okay, where am I in the context of where this has been and where this could go? Right? I'm not worried about whether I buy it here or I buy it here. Plenty of upside. All right, so keep some perspective on where you are, and remember to zoom out a little bit and say, where could this be going before you hyper analyzing whether or not you need to jump here because you're afraid of missing it, or whether you let it show itself a little bit more. All right, guys, I'll wrap it there on that one.